XRP on Coinbase has reportedly dropped by about 90% as big holders pull coins off the exchange. Less supply on the shelf can make every buy hit harder. This is what we call a liquidity crunch, a supply crunch. And I'll show you what changed, how it happened, we're going to verify it, and the charts that I'm looking at before the next move. Now, while this is happening, at the same time, Wall Street is circling at a new angle as BlackRock is exploring bringing ETFs on chain. We know Larry Fink has been a huge proponent of tokenization, but now things are getting serious as there are more doorways for traditional money to enter the crypto space through blockchain. There's also chatter about listings tied to altcoin ETFs at the DTCC, and we'll connect those dots and what they could mean for XRP moving forward, especially as we're about to get a spot ETF. And the market's not slowing down as we've seen 18 straight weeks with more stocks hitting new all-time highs than new lows, something that hasn't happened since the peak in 2021. And I get it, many people might look at this as a signal that the top is in, but remember, people in markets are extremely greedy, and more often than not, these rallies run longer than you would expect. As the old saying goes, markets can remain irrational longer than you can remain solvent. So any rational player or someone who's been involved in a few bear markets by now would look at this and say, I need to start selling. But I don't think you want to start selling too soon. Now, this is all happening just a day or two before that major Fed decision surrounding interest rates. And as we covered in our last video, since 1980, if the Fed cut rates while the markets were at new all-time highs or within 2% of those all-time highs, 100% of the times in history this has occurred, markets have been higher 12 months later. And maybe that's exactly what major investors in the crypto market are preparing for, as there has been a multi-billion-dollar Bitcoin buy ahead of all of these macro scenarios. In other words, accumulation just saw its second largest inflow in 2025, which is extremely bullish for Bitcoin, extremely bullish for XRP, and the entire crypto market. So I'll be breaking down why this matters for the whole crypto space and what I'm looking for next. And finally, Ripple dropped a fresh piece on stablecoins this week, which separates the solid stablecoins from the shaky ones. And listen, there are so many stablecoins that are entering the space now. What is going to be the key difference between the ones that last and then suck up all of that institutional liquidity and the ones who kind of just fizzle out? We have an article directly from Jack McDonald, who's the senior vice president of stablecoins over at Ripple. And yes, the RLUSD stablecoin is arguably one of the most compliant, transparent, and has done all of the hard groundwork in order to be one of the top contenders and choices for major banks and institutions moving forward by getting all sorts of licensing even throughout the United States and New York. And the reality is not all stablecoins are built the same, because as regulatory clarity increases and infrastructure matures, a growing number of companies are exploring stablecoin issuance, from banks and payment providers to consumer platforms and fintech firms. It seems like everyone has launched their stablecoin after seeing just how profitable Tether has been as a company, outperforming even BlackRock with only 100 employees. From that perspective, who wouldn't want in? Even WorldFi, Trump's team decided to launch a stable coin. So the appeal is obvious: faster settlement, lower transaction costs, and programmable financial tools. But as more stablecoins enter the market, it's becoming clear that not all are built to the same standards. And so the major difference between the majority of these stablecoins and a key player like Ripple is that Ripple's been in the game for quite some time. They've been through the regulatory ringer. They've been sued by the SEC and won. They have one of the best world-class teams in place to service the needs of major institutions and clients. And so launching a stablecoin, although it's attractive now, very similar to the ICO craze of 2018 when anyone could launch a token on the Ethereum blockchain, many will get rich really quickly on the revenues of that stablecoin, but very few will last. And I can't tell you how many of those tokens are no longer a thing today. Being in that space at the time, I thought everything was going to continue to do well, and we found out the hard way that that is just not true. Well, the stablecoin market is far more mature, and yes, it is here to stay, but very few will win in the long term. In other words, launching a stablecoin means entering the realm of compliance, liquidity provisioning, risk management, interoperability, and launching a stablecoin also calls for transparent and auditable reserves alongside rigorous regulatory alignment, standards that are essential for earning trust and achieving lasting adoption, which again, very few stablecoins will be able to do, which is what differentiates the RLUSD stablecoin versus the majority of other stablecoins that will enter the space or have already entered the space. And so you can see that there are tons of stablecoins already operable in the crypto markets, but many of these have very small market caps and arguably won't do too well in the long run. Whereas the RLUSD stablecoin has consistently been gaining in market cap, still under $1 billion, but I thoroughly expect it to likely outperform a player like PayPal in the long run, potentially even die, and then get up into that top 3 to 4 spot over time, which will create an environment where a lot of these flows will run on the XRPL, and the underlying token for that entire ecosystem is XRP. So anyone who's going to want to do business with the RLUSD stablecoin will have to buy and hold XRP just for fees alone, but more often than not, that liquidity will find its way into many tokens in that ecosystem. So XRP is going to be a large beneficiary of a lot of these flows from the RLUSD stablecoin. Now, it seems investors do know something, as both Bitcoin and XRP are seeing quite interesting situations with their inflows and outflows. Even XRP supply on Coinbase, who is headed by Brian Armstrong, has collapsed 90% as whales move tokens off exchange. Now, again, the reason they would be on the exchange is to trade, for buying and selling. But when they move off exchange, it's more likely a scenario where they simply want to add to liquidity, earn yield or interest on their XRP, and ultimately hold the token because they believe the price is going to be higher in the future than it is right now. They're not taking it to market to sell. So with less liquidity, a super squeeze could be brewing. And I had to double verify this because at the end of the day, a lot of people say a lot of things all over Twitter and X, and it's very hard to know whether or not it's true. But then when I asked Grok to do a bit more digging and even did the on-chain analytics myself, this seems to be true, as Coinbase held about 970 million XRP across 52 cold wallets in June. Then by mid-September, only 6 wallets are remaining active on Coinbase, each holding around 16.5 million XRP, totaling about 99 million XRP. This calculates to an 89.8% drop, aligning closely with the 90% figure. In other words, there is potential that we're going to experience a liquidity crunch, a supply squeeze. And when this occurs and the demand increases with less supply available, the price can skyrocket because people are bidding higher and higher and higher in order to accumulate or buy the XRP. And when FOMO happens, when a lot of people want it and very few people can get it, they're willing to pay extraordinary prices for each individual XRP. So this is the type of stuff where tokens can hit prices that people thought previously unbelievable, and at the end of the day, it doesn't make sense when the market cap's so high, but that's how liquidity works. Now, I'm not saying this thing's going to hit $100 on this supply squeeze. I really don't know, but realistically, I think a $10 prediction would be very serious in the case of a major bull market move through the end of the year. And so when you combine this type of a scenario with the fact that Bitcoin is also seeing its largest inflow to accumulation addresses. These are addresses that are known not to sell, just using on-chain analytics, and instead buy and hold. This is the second largest time that has happened, and this is happening directly before the Fed's rate decision because, again, many people are extremely bullish on this scenario, and the entire crypto market is a risk-on asset class. It does sell off hard in bear markets, and in bull markets, it pumps way harder than everything else. Well, this marks the second largest single-day inflow of the year. The transaction executed OTC is valued at approximately $3.4 billion, and here we have the charts to verify and confirm. You can see that we saw the second right here, right before we pop back off to a new all-time high, and we're not going to dive too much into those charts, but again, another very bullish scenario. Then combine that with the fact that market breadth is improving and that the NYSE stocks on both NYSE and NASDAQ are hitting new 52-week highs. highs. Now, here's the thing. A lot of people might mistakenly assume because they've been wrecked before or they've been through a bear market before that you need to be selling when everyone is buying. The problem is sometimes that buying lasts longer than you expect due to greed. And so really you're just selling the breakout instead of a range that is far higher above the prior all-time highs because of fear. You're afraid of getting wrecked again. But what I found is into new all-time highs, you want to hold for longer than you think. Now, there have been 18 consecutive weeks now with more new highs than new lows, which is the longest streak since 2021. Again, this can put a little bit of fear in your average investor, but for me, this is actually quite exciting because this leads me to believe that into the end of the year, we are truly going to get a crazy rally in the stock market and in crypto. Furthermore, 60% of the S&P's 500 components are now trading above their 200-day moving average, nearly the highest share since December of 2024. In other words, bullish momentum is incredibly strong, and this has been with a very negative backdrop surrounding wars in the Middle East, surrounding wars in Eastern Europe, surrounding all of the FUD when it came to Trump tariffs and just how bad inflation was going to be, surrounding that jobs revision, unemployment climbing, and the list goes on. Truly, this is one of the most resilient markets in history, and none of the top indicators are flashing, which leads me to believe I still want to be bullish.